Yo, what's up, everyone? Yeah, I'd be lying if I said that I did not fall asleep right when I got back from work today. I literally just totally fell asleep. And so now, I still want to backtest the market, so we're gonna do that. We're gonna do that, and yeah, guys, you can't get rid of me. You can't get rid of me. I'm never quitting. I'm never quitting trading. Literally to the day I die, I'm never quitting trading. And so yeah, I'm back testing, and I don't have the energy to do it at my computer, so I'm just gonna be doing it here. If you don't like that, sorry, I don't care. I'd rather live stream it than not. So with that, let's go ahead and start back testing. Let's do this. Okay. All right. And I might not be doing market recaps, at least in the short term, that much. I don't know, just because it's like getting exhausting, like, because I have to do the backtesting video and then film it, and I don't know, it can be exhausting sometimes. Alright, let's go ahead and look at what happened today. So, obviously, market was expanding higher, and we needed to really pay attention to this 1 hour gap because you can see that if I drop down lower time frame, right, this 1 hour gap, and actually 15-minute gap as well, but 1 hour gap, I thought this was AMD, but no, we had one final manipulation and then distribution, right? So we always have to remember that fair value gaps can be manipulated and reclaimed many, many times, right? Reclaimed fair value gap once, twice, 3 times. Supercharged fair value gap. That's the nickname I gave it. Whenever you have a fair value gap that gets reclaimed 3 times, this is a supercharged fair value gap. Honestly, if you ever find one of these in real life, it's like a Pokemon. They never fail, bro. It's like a legendary Pokemon, right? 1 hour reclaimed supercharged FVG, right? These things, they don't fail. So right, that's something I should have been more open-minded of when we came down here, especially because we ended up coming down, sweeping out 730, which was our true open for the New York session. So definitely something I should have considered, right? 730, what, yeah, true session open. So you see what I'm saying? Also, guys, I'm considering doing coding streams where I just code every once in a while. So let me know if you guys would like that. You see what I'm saying? I should have been more open-minded to this idea that this fair value gap was going to be used 3 times. meaning not only is it reclaimed, but my special term for value gap that's reclaimed more than once is a supercharged for value gap, or if it's been reclaimed 3 times. It's a concept I made up. To see this 1 hour gap be reclaimed a third time. See what I'm saying? Because at that point, if we reclaim it a third time, it's going to be much higher probability, right? And then you can see same thing with this 15-minute gap, right? Should have been more open-minded to see this 15-minute gap get reclaimed for a third time. You know, it's funny because, you know, every time someone fails, it's like, yeah, it's like the the average person just sees failure as just, wow, you failed. You're never gonna do it. For me, I just say I don't give a crap how many times I fail. I just keep showing up. It's just funny. I'm not normal. So yeah, once again, we use this for value gap. Actually, this for value gap gets used twice. Actually, no. 1, 2. You see the signature that, oh, this is nice looking signature. You see what I'm saying? So we had equal lows as well, right? These equal lows get taken. Alright, and we sweep out our true session open. We are above midnight, something to consider, but with the fact that we swept out 7:30 the way that we did, we could definitely consider this market to continue higher. So, equal low swept. Let's actually just mark this out like this. Right? One purge of the for value gap, a second purge of the for value gap, a third purge of the for value gap, taking our true session open. This 1 minute change in state off of this is where things start to really look light bulb, right? Because now this is looking like AMD. You see it? We might have even had SMT. I guess we don't. Do we not have SMT? Oh no, we definitely have SMT. Look, with this low. With 346. Oh, you know why this ended up reversing? So we had the 90-minute SMT. But what's stronger than a 90-minute SMT? London SMT. I don't know, man. Maybe the London SMT is not obvious at all. But this partial London SMT is, right? This partial London SMT, objectively this is obvious, right? You guys see this one with this 345 low. So partial London SMT. So to put this in your notes, guys, partial higher time frame SMT stronger than and it's newly created, it's stronger than the The one that the night. So this was a 90-minute SMT that wasn't a partial SMT, but this higher time frame partial SMT was stronger than the one that was not that was a perfectly sequential one. Makes sense. So look at this, right? This is London, so 6 hour partial SMT. This was actually stronger than the 90-minute SMT that we had that was perfectly sequential and wasn't partial, right? I don't know if that's because it was a higher time frame one because it was a 6 hour SMT, right? I'm actually just gonna mark this as 6 hour SMT and then partial. I don't know if that was because like I was saying, this one is more recent. I don't know if it's because it's higher time frame, but the partial SMT was stronger than the one that wasn't partial, which is interesting, you know? Okay, so um, we don't have SMT with this low, which is always interesting, right? But then a 1 minute change in state. I like the entry being on the close, uh, like almost treating this as an inversion for value gap, right? Where when we get this 1 minute closure, um, I'm basically anticipating the market to go higher. So 1 minute change in state. And so I'd put stop at the end of that momentum candle. So actually, let's just mark this out because I think this is an important lesson. Is the more recent partial SMT was stronger than here. Let's just make a note for this. The more recent partial SMT was stronger than the older lower time frame sequential SMT. Makes sense? Interesting. Let's go ahead and screenshot this. Old um, S&T less strong than newer partial. So anyway, when we get this 1 minute change in state, I like this, imagining this as an inversion for value gap, right? And a change in state where basically now market's going to expand off of this. And so you could definitely take this with your stop. Um, So what is this, guys? Do you guys see it? Accumulation, manipulation, distribution. So 15-minute supercharge for value gap. Why do I consider this supercharged? Because we used it 3 times. It's like it's a stronger supercharged reclaimed. Actually, let's just call it charged for value gap. Or we could just call it a reclaimed for value gap. Or we could just call it supercharged. Makes sense. Why do I consider this supercharged? Like, what do I mean by that? Because we used it 3 times. Like, I consider like a reclaimed value gap would be like this. We use it once, we use it twice. We use this 3 times. This is going to be very, very strong. Even stronger than a normal reclaimed for value gap. Yeah, 1 minute change in state. Since I don't have room, I'm just going to call this a for value gap, a normal one. So yeah, you can enter on this change in state, stop at that swing low. And so now, so why do I enter on this change of state? Because we're delivering from a 15-minute PD array. So with that in mind, 1 minute change in state. We have a obvious AMD, right? Very obvious AMD. So I'm not even going to mark this out as I normally do for accumulation because I don't want this to get in the way. But you know, obviously this is accumulation, right? This whole entire range, accumulation, we sweep 730. At this point, we need to be like, okay, market's now ready to distribute. And then we could target the first standard deviation of this move lower, which would be right here. We could even target the second standard deviation. Bro, that's a clean trade. That's 3.8 to 1. And this is why you don't give up, guys. Because if you can just consistently hit these, and you cannot be offside, you're going to be fine. You're going to be fine in the long run. What's this? Okay, 6. 1 micro, 6 micros, 24 micros, 72 micros. Okay, I'm practicing calculating the risk across the accounts. And then, yeah, if you took profit at 2, you'd be like chilling. You know what I'm saying? Oh, and then when does this occur, guys? When does this occur? Actually, it's not even during the macro. That's kind of surprising. So, flow state close, 9:42. Close, 15-minute fair value gap, 1 minute change in state. And yeah, obviously a lot we can learn here. This is also an inversion for value gap, you know what I mean? I like it as an inversion. So let's just say we took this as an IFEG, right? Same, almost the exact same trade where this is a for value gap we use 3 times. And yeah, this is essentially the exact same trade where we inverse this for value gap with the momentum candle and then same thing, distribution. Like I don't even need to take it as a change in state. I can just take it as a 1 minute IFG. $9.42. $9.42. IFG. 1 minute. Once again, 3 to 1. You know what I'm saying? 4 to 1. Yo, what up, Jerry? What's good? Just reviewing the market. I'm actually about to take a break right now because, yeah, but in hindsight, you have to be very prepared for these for value gaps to become reclaimed for value gaps, and that's something that's gonna come from screen time. It's not easy because in the moment you think, oh yeah, we're just gonna draw lower, but you never know. You have to be totally on your toes because you never know when a fair value gap is going to be reclaimed like a third time, like this one was, right? And then all of a sudden, if you have a reclaimed fair value gap that's used 3 times instead of 2, well, now all of a sudden this is going to be way high probability instead of just kind of high probability. It's going to be way high probability. Like this was a good 1 minute change in state. Right, you see this one. This one was a good trade you could have taken. Obviously, we hit that fourth standard deviation. But then this one, so I call this a supercharged fair value gap because we use it. It's reclaimed not just twice, not just once, but reclaimed 3 times. So anytime it's a fair value gap is reclaimed more than twice, I consider it a supercharged fair value gap. And you see how much more explosive this was, right? So we got the inversion out of this 15-minute regular or 15-minute reclaimed fair value gap that got used more than twice. And then bang. So just something to keep in mind. You have to be very, very considerate that these fair value gaps might end up being reclaimed. Guys, I'm going to go on a break. I will be back. But yeah, note these as, this is a very, very powerful concept. If a fair value gap gets reclaimed more than twice, meaning if a fair value gap, basically if a fair value gap's reclaimed 3 times, bro, that thing's supercharged, dude. It's got something in its system, man. So keep your eyes out because those fair value gaps will get used even after they've already been looked like they've been used multiple times. And then when they do get used that third time, oh man, now that's a high probability trade right there because now liquidity's been swept twice. Liquidity's been swept twice. You know what I'm saying? So you got to keep your eyes out for it. It's not easy, but those are going to be insanely nice trades. Insanely nice trades. All right, guys. I will be back. I'm gonna keep the stream going because I really don't care. Honestly, like I'm considering starting doing coding streams, just a whole bunch of like different type of streams. Like I'm considering doing chess streams, coding streams, honestly streams for everything. I really, I literally have there's nothing to lose, guys. I don't really care to be honest what anyone thinks of me, and so there's and with me not being scared of the downside, there's only infinite upside to just doing whatever I want to do. So I'll be doing a lot more streams nowadays going into the future and kind of just doing whatever I want to do. So, but yeah, I'm gonna go on a break. I'll be back. Let's see if anyone said anything. No one said anything. All right, guys, I'll be back. See you in a little bit. Where did I put my little bag? Here it is. Okay, I'll be back. Alright guys, I'm back. Let's keep going, guys. You know, I just tweeted, you know what you do when you're sad? You know what you do when you're sad? You backtest more. And you suck it up. Alright? You backtest more. That's what I do. Backtesting solves all problems, man. Alright. Just hang on 1 second. I'm still getting set up. Yeah, let's backtest. And guys, I might demo trade London tonight. I don't know if I feel like it. I could. I also might maybe I'll take it on personal. I don't know. But I'm gonna make a separate personal account for trading London. So. All right, let's keep going. So. Right, that 1 minute change in state, super nice, and we might have been within a gold block range. Actually, guys, I'm gonna get sweats on real quick. Hang on. So, yeah, let's look at this dealing range. And I'm going to start listening to music in a bit, but I'm waiting for my AirPods to charge. Bring this up. Up one more. And then maybe we actually need to go up another one. And now, this is looking nice. We swept liquidity into the low of the dealing range. Deliver to the high of the dealing range. So maybe, guys, the key to understanding gold block isn't necessarily... Look, let's get rid of this. It might not be necessarily, like, literal. It's just a dealing range. Don't treat gold block as literal. Treat it as a template for a market maker model. With that in mind, when we sweep liquidity and create an order block at the low of the dealing range, this order block is a high probability order block because it's in the low of the dealing range, right? Then we can project out this order block. And then that takes us to the high of the dealing range. You see what I'm saying? Like sometimes we are thinking that it has to be in the exact partition when I really don't think that's the case. I really think that the Goldbach levels are more or less a template for us to see, okay, AMD is fitting within this template. Let's enter via order block to target the opposing end of the dealing range. You see what I'm saying? So, so honestly, so just consider this 15-minute reclaimed gap and then 1 minute change in state. Because once again, an order block, change in state are the same thing, right? So now things are getting spicy, right? 1 minute change in state, retest at the low of the dealing range, sweeping 730. All of a sudden, this is looking nice, right? So let's go ahead and mark this dealing range out. This was a 81. I think this is why most people do not like gold bucks. They don't understand the point of it. They don't understand. It's just a template for market maker models. And that's incredibly useful, and most people don't realize how useful, and they think, oh, it has to fit in exactly in this range and it has to do all this, and it's like, actually no, this is not supposed to be exact. This is supposed to be a template, right? You got to understand liquidity, and past that, this is just a template. So 81 low, 81 sweep partition, and then the 81 high partition. I mean, think about it. The first people to even use this, right? It probably wasn't that useful because no one was trading it. But then over time, uh, it gave them an edge because they were able to have a template. More and more people start trading it, and then bang, it becomes useful. So yeah, 81 liquidity sweep partition. We had the low of the dealing range. See what I'm saying? All these things that we're looking at all line up, and then we expand to the opposite end. So 1 minute change in state, I put stop loss below the order block here, like this. And then look at that. We enter on a retest of the order block, and now this is AR, right? You see what I'm saying? So once again, this order block was at the low of the dealing range, making it a higher probability order block. Past that, we don't overcomplicate it. I'm just gonna, okay. But yeah, 15-minute for value gap, 1 minute change in state. This is a different version of that same idea. So this is 936, not within a macro, but still. 936, 15 flow state retest, 15-minute, 1 minute change in state. And yes, I do consider this change in state, and it's something that I've slowly over time have become more accustomed to considering just small little change in states on the same side of the curve to be change in states. 15-minute for value gap, 1 minute change in state. Okay. So let's clean this up a little bit. So, we were obviously above midnight. Yeah. I kind of want to see the, hang on. So yeah, you can clearly see this was manipulation below our true open, right? You clearly can see this into our 15-minute reclaimed for value gap. Supercharged, you could say. Okay, hang on, guys. And I'm being serious, guys. I might actually trade London tonight. Like, I might. Okay. So yeah, below 730. Pay attention to 922. We're below our 22-minute true open as well. So in hindsight, this makes a lot of sense, right? Nah, that's crazy. That's crazy. Look at this, guys. True opens are really, really powerful. And I'm going to be listening to music, actually. I need to get my AirPods. I think they were, yeah, they were just charging. Should be good now. Okay. So. But yeah, I'm just going to be listening to music. Highly recommend you guys listen to music as well. Because I can't play music on the live. But yeah, 922. Why is 922 important? Because it's a true open for the 90-minute cycle. So I'm just going to call it 90 minute, like this. So yeah, 9:22. So it's not a 22-minute true open, it's the 90-minute cycle true open. So I identified that. So this is the true session open, this is the true 90-minute cycle open. See how we identify the manipulation below both of them? Once again, these are just reference points to help us. That's all true opens are. So this whole thing, accumulation. Once again, guys, I'm listening to music. I highly recommend you guys listen to music as well, because that's what I'm doing. Accumulation, manipulation, distribution. Obviously, we could have swept midnight, but we didn't because we were expanding higher. We could even take a range projection of this. And then this is where it gets crazy. Right? If I take a range projection from body to body, yeah, that's just nuts. And so you guys see what I mean when I say these markets are so precise? That's why I'm never giving up, bro. So whenever we visit -1, the opposing ends, sometimes we will, like, obviously manipulation is smaller than distribution. So when we manipulate, we're going to distribute further. Make sense? So that's why we go to the -1, but then we expand to the 2. So this is a really good example of the CBDR, and not necessarily CBDR, but range projections. We take an obvious accumulation range, we measure it out, and we use it as a confluence for where we're expecting the low and the high of AMD to form, right? Because if it's truly AMD, then measuring out the accumulation range, why wouldn't that give us a good idea of where manipulation and distribution would be? Because manipulation is going to manipulate the low, and then distribution is going to expand. Get what I'm saying? AMD. So there's that one. And then we can do the same thing with this manipulation. And then see how the standard deviations of this also are pretty nice. I'm not even going to use that. Wow, look at that. OTE. And so for all the people wondering, oh, what if the market stopped doing smart money concepts? They can't, bro. Markets can't not manipulate. It's not possible. They are manipulated. They are. They have to be. So we measured this out with only the red bodies, not the green. Here's sniper entry. Second standard deviation hit. Imagine people thinking that I'd ever give up. Nope. Never. Never, never, ever giving up. And then you can see why this third standard deviation kind of marked this high, right? These markets are perfect, right? They are and they always will be. You see? See how this first standard deviation, you can see how we wick into it? That's because there was profit taking there. So this is why I like to use range projections as well as standard deviations. So I'm just gonna mark that as sniper. And then we can measure out the change in state from the body, and you can see there we go. Eighth was also at that first standard deviation. So accumulation, manipulation, distribution. I need to charge my laptop. Yeah, bro, I'm never stopping, bro. It's so, like, I mean, it's just so obvious that, you know, if I don't give up, I'm gonna get it. I'm gonna get it. And if you don't believe in me, then fine. I don't care. I'm never giving up. So I can't lose. You can't lose. Alright, guys. I just want to show this as AMD, right? Very obvious AMD. AMD, we had range projections and standard deviations line up well. Alright, let's plug my laptop in. Alright, this is not the right charger. What is this charger? What the? Guys, I might actually trade London tonight. I'm just kind of in the mood. Typically, I trade the best when I'm just chill, watching price action. And that's kind of what's going on right now. Just feeling incredibly chill, just want to watch price. Let's see if anyone said anything. Okay. I mean, objectively, these markets are perfect, guys. I'm sorry to anyone who can't see it, but stop blaming the market. The market's not wrong. The market's right. Okay, let's keep going. So, we might have had Phoenix model at the highs. Let's go ahead and look at this on the higher time frame. So what really happened here? Well, we were expanding, right? We've been having daily IRL to ERL, right? We've been expanding from this daily fair value gap, which is an internal range liquidity, right? Meaning just a fair value. Internal range liquidity is a fair value gap. And we've been expanding to all-time highs. The market moves from fair value gaps to all-time highs. Internal range liquidity to external range liquidity, right? So that's kind of what was going on the higher time frame. Then when we break this down, we have obviously we came up to this high. YM had a crazy rejection block. And honestly, guys, something that we might need to start doing with rejection blocks when they're this big is we might actually need to split them into quarters, not just halves. And another thing I was thinking, yeah, look at this, right? Look at the way we interact with that 0.75. Same thing. Anytime you have just any giant gap, split it up into fourths, not half. Maybe we should look at price action right now, but I guess I kind of want to look at what happened yesterday. We end up getting a CRT, right? You see this? We have a candle range high, candle range low. Very obvious CRT. Candle 3 delivers us lower. Yeah, this is one of those things where it's like incredibly textbook, right? I kind of want to put this in the notes, guys. Yeah, I'm definitely open-minded to trading London. And guys, basically what I'm thinking is I make certain accounts for basically certain things. So, I'm thinking I might like have one personal account for New York, one personal account for London, or something like that, you know? So, this is a 1 hour CRT. Why is this a 1 hour CRT? Well, this is 1 hour candle range. So we can honestly mark this out like this. CRT. You guys think I should do workout videos or like gym videos? Because I'm honestly thinking about it. I'm just gonna call this candle 1. And then from 10 to 11, we obviously manipulate the high. Yeah, guys, I'm genuinely thinking about, having certain accounts for just different sessions. And I feel like the main thing in trading really is just risk management. Like, managing your risk and allowing yourself to take opportunities across different sessions and then be able to allow yourself to lose. That's the main secret to trading, honestly, is just losing, right? If you can lose and be disciplined in the long run, as long as you trade decent, you can succeed. So I'm honestly considering making myself accounts for London. So then 11 o'clock we get that. Wow, this is the most obvious CRT in the world. Is it not? You know what I'm saying? C1, C2, and then basically the candle 2 closes, and then we distribute. That's crazy. This is like, this goes in the CRT textbook, guys. This is really nice. When was this? This was today, bro. Wow, this was today. That's crazy. This was today, guys. That's really cool. So yeah, like I've been saying, the open of candle 3, I consider this to be anything above this is valid for shorts, right? So this is Genesis entry. This is the Genesis model. I made this up where basically we find candle 3 once the CRT is formed. Anything above it is valid for shorts. So this is C2 on the 1 hour. It's crazy how much there is to review in these markets. It never ends. So our job is to get in on distribution back to the CRT low. Bro, these markets are never gonna stop being algorithmic. And I know people get worried. It's like, oh yeah, no, these markets, they just once everyone knows about it. No, bro, no, 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 no. These markets will always be algorithmic because as long as humans are part of them, there will be emotions, there will be fear, there will be greed. So this is C3. Hopefully this makes sense, right? We look for the open of candle 3, anything above it, that's kind of looking where we're looking for shorts, and then bang. So I call this the Genesis model. 1101. Genesis. 1 hour. Yeah, 1 hour candles, and then I don't know. I think it's just 1 hour candles. So honestly, guys, we can maybe trade Asia if we want to. Not necessarily trade Asia, maybe just tape read Asia, but yeah, I kind of want to tape read Asia, guys. Yeah, we'll probably tape read Asia. Hang on. So I might trade Asia or London. Probably just watch price. I'm making what I'm doing is I'm making different bank accounts for each of the different broker accounts that I'm gonna create on Tradeovate for different trading different sessions. So I'm gonna have one for London session, I think two for New York, and one for Asia, and then maybe just for fun. Maybe one for PM too. That way, basically, I have a really disciplined strategy for how I can take trades and be disciplined about it. Makes sense? Hopefully that makes sense. So, let's go ahead and keep going. I kind of want to just review. I kind of want to forward test right now. So let's look at Asia. So we have this 15-minute BPR. This is the most interesting part about price action right now. Right? 15-minute BPR. Right now, we obviously have this in giant range below. So, we could definitely measure this out like this. We might only go to the half standard deviation. Yeah, we already used it, bro. We already used it. Hmm. So, yeah. So, yeah, 15-minute BPR. Yeah, guys, this might be really simple, but this is looking like a, you know, pretty simple AMD. But YM does have equal highs. Yeah, we had a fair value gap. This is the fair value gap partition. That's honestly, that's really interesting. Swept liquidity. We have a volume bounce. It'd feel a little too easy if this volume imbalance rejects price. Maybe. I'm honestly just going to tape read this. So this is a gold block volume imbalance. On the 1 minute. Sometimes, you just kind of just tape read. Just to get an idea of what the market does. So this is within that fair value gap partition. Look at that. There's a volume balance on the 3 minute. 5 minute just inverse this fair value gap. Yeah, I could definitely see us going lower off of this. Are we above Asia True Open? Yeah, 1930. We're very much above Asia True Open. I need to code my own stat map. So 1 hour statistical manipulation level. Probably distributing down. $21. We need SMT with this high for it to be sequential. 2055. I don't think it's sequential. So yeah, we honestly might deliver lower now because we inverse this. So here's the dealing range low on the 27. Could be a draw on liquidity. Should we try and take a trade on demo? Yeah, I say yes. If we can see an opportunity, let's take a trade on demo. I mean, this right here is kind of opportunity in and of itself. 5 minute change in state. Was this a 1 hour gap as well? So here's this 5 minute breaker. So honestly, guys, let's considering something like this on demo. So like an IFG Jan entry. Like, this is obviously AMD. You see it? Accumulation. Oh, yo, it's midnight right now. Like we thought, bro. Like we thought. So we'll probably deliver lower here. So yeah, we're probably delivering lower. I don't think we're gonna come all the way up there. And this is like in reference to the trade I took today, right? If we come all the way back up there, that's kind of a red flag, in all honesty. Typically, when we distribute, we don't, there's not that much opportunity. You know what I'm saying? Nothing obvious, though. But I do think we'll distribute lower. Guys, I think this stream is pointless. I'm not gonna lie. I think I'm gonna end the stream.